Hey everyone, Couch Investor back to another video for today. So in today's video, we're going to go over New Holdings earnings report. Again, flawless execution and growth by the company in this difficult macroeconomic environment, especially also in Brazil, where the political landscape is also quite tricky right now. Now, if you wonder why I own a small position in this company, you can watch the video in the top right corner. So in this video, we're just going to touch on the highlights of the quarter. I'm going to try and keep it as short as possible, but with as much information involved. Now, before I go into the report, I just want to touch on one thing with regards to graph. As with a lot of growth stocks these days, this is on the weekly chart, by the way, you can see that we tried to go over the 200-day moving average, didn't work. And this is a pattern that we've seen in a lot of growth stocks recently. So this might mean that suddenly the buyers are not as aggressive as they were in the last 2 months. Remains to be seen what happens, of course, with inflation still high, etc. That's obviously the talk of the town, but this is not the first time that we've seen this green candle not being able to go over the 200-day moving average. Of course, on Monday when this video comes out, the market is closed, President's Day, so we'll have a shorter week. Let's see what happens with the next green candle. But overall, RSI is still okay, MACD is still positive. And now before I go into the earnings report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, I would really appreciate it. I think we're very close to 24,000 subscribers. Let's try and reach 30,000 by the end of this year. I know it's a long shot, but let's try. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. So basically this slide can summarize what happened in the quarter. Again, flawless execution, growth in each and every segment here. So customers grew 38%, activity rate increased as well. Revenues increased on FX neutral basis 112% year over year. Gross profit increased as well. Gross margin went from 36 to 40%. Adjusted net income of $114 million. Margin went from 1% to 8%. Now, when it comes to New Brazil, why do they focus on that? Because it's a bigger market for them, a more mature one as well, as we will see in just a couple of seconds. Now, revenues there increased 110%. Adjusted net income went from, well, basically negative 4 million to 158. Net income margin adjusted, that is, negative 1% to 12%. So we can maybe use Brazil as an example to what might happen with the other markets that they're in right now that are still in the early stages, which we can clearly see right here. Colombia, Mexico, 2 to 3%, percentage of adult population there right here. This is basically the S curve. So these are still in the early stages. Brazil right now is in the growth stage, so still not mature, even though it's performing very, very well. That's 44% of the adult population, so still a long way to go until we reach that point of maturity. Now, if we go back up, we can see the same thing here with the products. So new accounts, credit cards are already in the growth phase and a bit past it as well. This is why this is the segments that have been growing quite nicely recently and are pretty profitable, let's say. Then we have personal loans and investments. This is just starting to grow very nicely. And then the other one, early product cycle, crypto, marketplace, insurance, SMEs, just the beginning there. And so overall for the new business as a whole, we're still very early in it. And so as I said, Brazil, focus on Brazil here is pretty obvious. So a geo at a growth stage. You can clearly see activity rates is now at 82%. On a CAGR basis from 2018 to 2022, this grew 85%. The customers, which again, tremendous growth. Percentage of adult population, as we've seen before, 44% in 2022. Again, also the growth there has been tremendous over the year because these markets are ripe for disruption. There have been a lot of banks there. By the way, I know a lot of people think that when we talk about Latin America and the banking system, etc., they automatically think that they are super outdated and old, but actually they were one of the first banks and fintech area where digitization happened way before Europe and maybe even some parts of the United States as well. This isn't new for them, but there's a lot of aspects that, new is doing much better right now than the traditional banks. And then when it comes to revenue for the Brazil segment, so that grew 110% year over year. We're now at a gross profit margin of 44% here. So we've been flat for a couple of quarters-ish. And now we've seen this huge acceleration here in Q4. And then of course the same thing, but for the bottom line when it comes to the Brazil segment, I just want to touch on this thing right here, annualized adjusted return on equity. All right, we went from 6% to twice 20%, and now we're at 40% adjusted return on equity. Whether or not that number can be sustainable as they continue to grow in that market remains to be seen. But still, if we're around that 40% and they still continue to grow at the growth rates that we've seen, I mean, it's just incredible. And then as for the overall business, so strong customer acquisition and activity rate improvement continue. So of course, total customers that grew. Now it's fine to grow total customers, it's fine to grow active customers as well, but what about activity rate? You want to attract customers that are active with your products, right? We've seen this with PayPal, for example. Previously, they went for all customers, even those that just make one transaction per month or something like that, which doesn't make any sense for them. So here it's really nice to see that we went from Q4 2021, 76.3% activity rate to now close to 82%, while also growing active customers by 49%. And this leads me to one of the most important slides in the presentation. So compounding effect of more engagement and more cross-sell driving average revenue per active customer expansion. So you can clearly see the darker lines here are the more recent acquired customers, let's say. And those are the ones that are, well, first of all, starting at a higher point. Second of all, growing faster than the rest. And this is exactly what you want to see here. This is a very, very important slide to keep an eye on in the coming years. And then this leads me to the next one, which is also a great graph that represents the power of this business. So compounding effect of customer addition and maturing limits driving up purchase volume. So on the right here, you can see purchase volume per customer, the more darkish lines. Of course, I don't know if you can see it quite correctly, but look at where my cursor is. We're already starting a bit higher than previously, spiked up, and then now we're accelerating over, well, going into that total average of $110 pretty fast. Then when it comes to purchase volume, that has increased 54% year over year on an FX neutral basis. Now, I'm not going to bore you with all the other numbers because this presentation is 57 slides long. So I'm just going to conclude with this one right here. Best in class cost structure lays foundation for sustainable long-term differentiation. So cost to acquire $6.5 per customers, $2 in paid marketing. Cost to serve is under $1 monthly average per active customers. That's 85% lower than incumbents. Cost of risk, 5.2% consumer finance delinquency rate, 25% lower than the Brazilian industry. And cost of funding, $15.8 billion of deposits. That's 78% of CDI, which is the Brazilian interbank deposit rate. Now, overall, we know that Nu has still a long way to go. They themselves say they have a long way to go right now. They're close, if not a bit better than, let's say, the incumbents. But since they are digital only, right? They don't have fancy schmancy headquarters that cost them billions of dollars. They don't have hundreds of thousands of employees. So obviously their business will operate more efficiently over the long term. Their margins should be much better than other banks. Otherwise, why are we investing in Nu and not investing in traditional Brazilian banks or Latin America banks, right? Doesn't make any sense. So still right now, they're still growing fast. So you might see a lot of improvements in the next coming years pretty fast when the, let's say, Mexico, Colombia markets start to reach those maturity levels of Brazil. But as we've seen, Brazil still is in the growth phase. So over time, this business just becomes better and better because Latin America is a huge, huge market and they still have a lot of work to do. And as we've seen, execution here has been close to perfect. Of course, there are still some risks. There's political risk, there's financial risk, economic risk, etc. You have to take that into consideration. But to me, again, this is a great business to own. $23 billion in market cap, of course, not the cheapest business out there, but I'm happy paying a premium to hold such a quality company with quality management. But of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.